This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Strong start. Stocks take off, extending last week's advance as they recoup a large chunk of their recent losses.
If you had to choose between buying long-term bonds or equities, I would choose equities in a minute.
Warren Buffett says stick with stocks, and there's one in particular that he's bought more than anything else in the last year. School safety, security systems are being reassessed, but it doesn't come cheap. Those stories and more tonight on Nightly Business Report for Monday, February 26th. Good evening, everyone, and welcome. I'm Sue Herrera. Tyler Matheson is off tonight. Stock pullback? What stock pullback? The market has reclaimed a big chunk of its most recent losses, thanks in part to today's nearly 400-point gain on the Dow. Concerns over rising interest rates have taken a back seat as investors refocus on global growth and corporate profits. Today, the Dow Jones Industrial Average advanced 399 points to 25,709, led by financial and technology shares. The Nasdaq added 84, and the S&P 500 was up 32. Bob Pisani has more on the day's rally on Wall Street.
It was a strong start to the week with the Dow up over 200 points at the opening, closing up almost 400 points. Last week, stocks started strong every day but faded late in the day. That began to reverse on Friday when stocks closed at their highs, and it continued today. This week is all about Fed Chairman Jay Powell's testimony to Congress on Tuesday and Thursday, but the markets are telegraphing they're not concerned he'll be overly aggressive about raising rates. The markets are very different in the last 2 weeks than in the first 2 weeks, when stocks dropped about 10% in early February on concerns about higher interest rates partly. But since then, the S&P has recovered about 75% of its losses. It's a sign investors still seem to have confidence in the global economic recovery. Indeed, the sectors with the strongest recovery have been technology stocks led by Apple, Intel, and Cisco, and industrials led by 3M and Boeing, both sectors that are very sensitive to the global economic recovery. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
One day ahead of Fed Chair Powell's testimony, Federal Reserve Governor Randall Quarles today reaffirmed his support for gradual interest rate increases and offered an optimistic view of the economy. Quarles suggested that the economy may be on the verge of a sustained period of faster growth. And Goldman Sachs is keeping its eye on interest rates. An economist at the firm said that if the yield on the 10-year Treasury hits 4.5%, stocks could move sharply lower by as much as 20 to 25%. The economy, it says, would also suffer a sharp slowdown. But that's the worst-case scenario. The firm's base case calls for a yield of 3.25% by the end of the year. And of course, the housing market is also rate sensitive. Today, we learned that sales of new single-family homes in January fell for a second straight month and hit a 5-month low. The number was weighed down by steep declines in the Northeast and the South. As we've been reporting, a shortage of homes is pushing up prices and sidelining some first-time buyers. General Electric is making more disclosures. That company revealed a Justice Department investigation into its now defunct subprime mortgage lender. GE also plans to restate 2016 and 2017 earnings after adopting a new accounting standard. The restatements were expected, although some say they could make it difficult for GE to reach its 2018 financial forecast. General Electric also nominated 3 new directors to its slimmed-down board. After trading lower for most of the day, the stock turned around and it finished up more than 1%. Berkshire Hathaway's Warren Buffett said that he was staggered by GE's financial lapses and the size of the charge that it took earlier this year. The billionaire investor has mostly sold his holdings in GE and said he hasn't purchased any recently. That was just one of the many comments that he made during a wide-ranging interview with Becky Quick. She filed this report from Omaha.
One of the big takeaways from Warren Buffett and his letter to shareholders this year is that Berkshire Hathaway is sitting on $116 billion in cash. That is money that Buffett would like to put to work, but when he looks around to buy businesses, he says prices are just too high. He's not finding anything that he likes at the right price. However, that does not mean that he thinks stocks as a whole are overpriced right now.
The stock market relative to the long-term bond market. If people have 3 choices, pretty much, if they're going to be in marketable securities. They can own reasonably long-term bonds, they can own equities, or they can keep it in short-term cash equivalents. If you had to choose between buying long-term bonds or equities, I would choose equities in a minute now. Yeah, that doesn't mean I think the stock market is going to go up or anything else, but if I were going to own a 30-year government bond or own equities for 30 years, I think equities will considerably outperform that 30-year bond over the 30 years.
It sounds confusing, the idea that Buffett can't find any prices he likes for businesses, but he thinks stocks are not overvalued. There is a way to match all of this up.
You can buy small pieces of businesses for less than you can buy whole pieces of businesses.
For the premium you'd have to pay if you were buying the whole thing.
Yeah, so you get a bargain as an investor compared to what I can get in terms of buying the whole business. And people, if they just think of stocks as pieces of business, they'd be so much better off than thinking of them as little things that move around in price. And I think with Berkshire, we have an unusual number of people as shareholders who just look at Berkshire as a business. They look at it as a savings account. They put some money in 20 or 30 or 40 years ago. We retain it and reinvest for them, but we're their savings account. And that's the way I look at my own stock.
Of course, the question that Warren Buffett most frequently gets asked is what stock is his very favorite stock in the entire world. It's tricky to try and get an answer out of him, and when we asked him, he said Berkshire Hathaway, because that's where he has 99.8% of his money. We dug a little deeper than that, though. Listen in.
If you look at our holdings, you would assume that we like them in the order in which they rank by dollar value of holdings. But if you look at them in terms of recent purchases, over the last year, we've bought more Apple than anything else.
Can I take it and run with that as a headline? Apple's your favorite stock?
I don't think, no, because I haven't told you what I might have been buying the last week or month.
If you actually look at the top holdings for Berkshire as of the end of the year, filings will tell you that the number one stock that they hold is Wells Fargo at $29.2 billion worth. Number two is Apple. It comes in at $28.2 billion. For Nightly Business Report, I'm Becky Quick in Omaha, Nebraska.
Lots to talk about. Let's talk more about Warren Buffett with a familiar face to all of us. Susie Garib is with us, senior special correspondent with Fortune magazine. It's always great to have you here, Susie. Welcome.
It's always great
back.
to be here. Thanks, Sue.
So Becky was talking about all of this cash that Mr. Buffett has on hand. You've been talking to money managers today to find out what their reaction is. What are you hearing on that?
You know, first of all, it's so fascinating that all of these money managers who really know the company so well and know Warren Buffett were just shocked at the size of how much cash, $116 billion. That's a huge amount of money. And the company keeps throwing off another $30 billion every year. But as Becky just said, you know, they can't find companies that don't have such high price tags on it. So I asked them, where would you tell Warren to put this money? And or they said, buy more Apple, following the theme
on that.
Or, you know, buy more Berkshire Hathaway stock with all that money. But in terms of actual businesses, you've got to look at what goes well with the Berkshire portfolio. And it's steady Eddie companies. They're not necessarily exciting
they're not
companies.
flashy.
They said industrials, like the one company they mentioned was Cummins Engines. You know, they make engine parts and engines. But on the consumer product side, global brands, they said maybe Estee Lauder's an amazing company, maybe Staples. So we'll see. Warren Buffett's going to come up with something to do with that money. But all of the money managers I talked to don't put the money in a dividend. Sit on the cash.
Interesting. Sit on the cash instead of go for the dip. That's interesting. He also addressed the healthcare alliance that he and Jeff Bezos of Amazon and Jamie Dimon of JP Morgan Chase have put together. And he said it's about much more than just lowering healthcare costs, which is what the street assumed it was about in the beginning. What did you make of those comments?
Well, I think everybody has been wondering what this venture that these three powerful men from three powerful companies are really going to do. And until today, we really didn't have any details. So a couple of things that we learned from Warren Buffett is, one, they do want to get the cost down. You know, they want to do more than just shave off a little bit. But also that their job number one is to find a world-class CEO. And he says, we really got to get the right person in there, he or she. And he didn't let on, you know, whether it be somebody from an established healthcare company or somebody outside of healthcare that might be more disruptive. Because, you know, Sue, for all the disruption we see around us, like the Ubers and the Airbnbs, you don't see it in healthcare.
You don't. You really don't. Very quickly, he's 87 years old. What about succession?
The only thing new on it, they've tapped two people to be vice chairman, the guy who's in charge of insurance and the guy in charge of all the energy operations, Greg Abel and Ajit Jain. The vote is probably Greg Abel on that. But 87, I thought today he looked great. I don't know what you thought, but he got up early to do that interview. Pretty good for 87 years old.
Probably had a Coca-Cola, too, before he did.
You're absolutely right about that.
Thanks, Susie. Always good to see you.
Thank you for having me.
Susie Gareb. Well, in that interview today, Warren Buffett, who once publicly shunned the airline industry, also said he would not rule out owning an entire airline. And that comment sent the shares of the big carriers higher in today's trading session. It is time to take a look at some of today's upgrades and downgrades. Target's rating was initiated at Outperform by Credit Suisse. The firm cites the retailer's aggressive strategic changes, a strengthening consumer, and potential market share gains. The analyst has an $86 price target. The stock rose nearly 2% today to $76.90. And the rating on Guess was upgraded to buy from neutral at B. Riley FBR. That firm sees significant earnings upside over the next several years as the new CEO executes his strategy. The analyst price target on the retailer is $20 a share. Guess was up more than 5% to $15.87. And another retail upgrade, this one for Finish Line. Its rating was raised to positive from neutral at Susquehanna. The analyst there cites better than expected sales and promotional trends, and the firm also raised its earnings estimates on the athletic apparel retailer. The price target is now $14, and the stock rose 5% to $11.04. Still ahead, which companies could lead the coming wave of a new, more advanced era in technology? Across the Atlantic, global technology companies are showing off what they think will be the next big thing. John Fort reports tonight from the Mobile World Congress in Barcelona.
New phones, new networks, and a scramble to rewrite the rules of business ahead of a new tech wave. That's the story of this year's Mobile World Congress. Let's start with the phones. The surprises were in the software when Samsung took the wraps off of its hotly anticipated and heavily leaked Galaxy S9. This has AR features. It's got a fresh new camera that's used for personalized features and for new filters. On the outside, the S9 and S9 Plus don't look much different from last year's model. Inside, they boast new camera features like super slow-mo and dual aperture. That's the latest trick to take better pictures in low light and sharper action shots and take the fight to Apple's iPhone X. They're available March 16th at $720 for the S9 and $840 for the Plus. The backdrop to this is a sobering reality in the mobile world. The smartphone business isn't growing anymore. Meanwhile, there's a lot of hype around so-called 5G wireless networks, which should arrive in the real world at the end of this year and bring trillions of dollars of new growth from a world of connected cars and cameras and medicine. But it's still not clear how 5G will become a reality. The iPhone and its offspring brought us this far, but what's going to be the iPhone of 5G?
Ultimately, the initial deployments might be driven by a need for proving out the technology, proving out the market demand, but ultimately it won't scale without a real need from enterprises or from consumers. And I think that transcends any sort of political influence. And ultimately, I think, like I just said, there will be market demand for it. It's just going to take a period of time.
The move to 5G is a global race. Independent analyst Chetan Sharma points out that the U.S. has some natural advantages because of the way the smartphone revolution was born in Silicon Valley. But with China determined to make its mark and Europe eager to catch up, it's not over yet. For Nightly Business Report, John Fort in Barcelona.
Dean Foods gives a disappointing full-year outlook, and that's where we begin tonight's Market Focus. Increased competition and a glut of milk caused quarterly results at the dairy producer to miss estimates. The company, which gave a weak profit forecast, also said it plans to consolidate its manufacturing operations, which it expects will result in significant cost savings. But shares of Dean Foods fell 13% to $8.81. The consumer products company Spectrum Brands is merging with majority shareholder HRG Group in a deal valued at $10 billion. Spectrum, which owns brands like Black & Decker and George Foreman, says its current management will maintain their positions at the combined company. And as you can see right there, they finished modestly to the upside in Spectrum and sharply higher in HRG Group. After the bell, Tenet Healthcare said the new tax law caused it to report a wider loss. Quarterly revenue at the hospital operator improved, and the company raised its earnings outlook for 2018. Shares initially popped in after hours, but finished the regular day down 1% to $19.07. And Fitbit said that fewer sales of its fitness devices during the holiday period caused that company to report a surprise loss and weaker revenue. The company said it expects overall sales to fall as much as 20% in the current period. It plans to combat that weakness with cost cuts and a focus on smartwatches, a category Fitbit said is gaining popularity with its customers and consumers. Shares initially fell in after hours, but ended the regular day up nearly 5% to $5.54. As a growing number of companies cut business ties with the National Rifle Association, billionaire investor Warren Buffett says he will not boycott gun makers. His company, Berkshire Hathaway, does not own shares in gun manufacturers, but says there's no rule that it couldn't do business with one.
I think you should be pretty careful before the company takes a big political opinion and something the society has decided that they say, well, we're going to have a different view. Now, I also think people individually should very much express their views. I mean, I think what the kids are doing there is very admirable, but I don't think that Berkshire should say we're not going to do business with people that own guns. I think it'd be ridiculous.
So let's talk more about this. When it comes to social issues, should companies take a public stance? Joining us to talk about that and more is Kelly McElhaney. She's director of the Institute for Business and Social Impact at the University of California, Berkeley Haas School of Business. Welcome. Nice to have you with us this evening.
Thank you.
Let's start with the broader issue of should companies be taking a stand or putting out an opinion on social issues?
My belief is that yes, they should, but as Mr. Buffett said, it's not for the faint of heart. They need to do it very carefully, strategically, and well thought out. But, you know, companies are a collection of humans, and I think we forget that. It's not a disconnected entity. CEOs are humans, and they have the desire and responsibility to really satisfy demand, and employees are demanding that their company, that their CEO, that their leader speak up and speak out.
And is it important that it comes, whatever the message is, from the CEO herself or himself rather than putting out a press release or a statement?
I absolutely believe, Sue, that it is. We need to hear this not from a black and white press release that is so long that most of us won't read past the first two sentences, but from a human being where they can tell a better story. They have passion, they have, inspiration and opinions.
Mm-hmm. We set this segment up with a soundbite from Warren Buffett, and he obviously was referring to the debate that is raging across the country right now on gun control. It is a highly charged debate. Is it a higher risk for a company to take a stance on a social issue that is so politically and emotionally charged? And how do they navigate that?
It is absolutely and certainly a risk. And so I think they navigate this by calculating that risk up front, by engaging with stakeholders around what those stakeholders believe. I think it's pretty difficult for most people in this country to not have some sort of heart-based reaction to 17 kids being killed.
Now, the other issue is if you don't take a stand, if you play it quote unquote safe, and other companies, especially other companies in your niche, do take a stake, is that a risk that you are not making a statement on a social issue?
That is a real risk. And while I know for CEOs it's awkward to take a social stand, I think it's incumbent on them now, if for no other reason that other companies are doing it, so it becomes a competitive advantage.
Very quickly before we wrap up, a public company versus a privately held company, but one that perhaps is used by a lot of consumers. Is it a higher risk for a public CEO?
It is. It's much higher risk. It's less risk for consumer-facing brands, and it's less risk. The really important thing is for CEOs to speak up en masse, because it's much better to have a collection of voices rather than just one sort of lone person out there speaking up on controversial issues like this gun control.
Kelly, thank you so much. Appreciate it.
Thank you, Sue.
Kelly McElhaney with the University of California, Berkeley Haas School of Business. Well, students at the Marjorie Stoneman Douglas High School in Florida returned to class this week. And across the country, school administrators, teachers, parents, and students are reassessing their school's security systems. But hardening a school doesn't come cheap. Scott Cohn reports from Newark, California.
This high school, with 1,900 students and 100 staff members, is in Newark, California, but it could just as easily be in Newark, New Jersey, or Newark, Ohio. Every school district in the country is facing the same issue.
School safety is always our biggest concern. If I had to pick one question that we get from anyone is really, how safe are schools? That's kind of the question that people ask before they even get to academic questions.
Security is already robust here: fencing, signs, guards. Superintendent Patrick Sanchez says they not only have cameras, but also a sound system that can detect and locate gunshots anywhere on campus. But they still could use more.
In a district this size of about 6,000 students, personnel alone increase would probably be $3 million.
Plenty of companies are happy to help. Indiana-based Allegiant specializes in systems that can lock classrooms at the first hint of trouble.
Our industry and Allegiant is willing to partner with every schoolhouse in the nation to review procedures, capabilities that will help drive awareness and planning for high school security.
The industry helps fund a nonprofit, the Partner Alliance for Safer Schools, which says at the very least schools should consider upgrading their lighting, windows and doors, and cameras. The group says that basic security would cost around $100,000 for a typical grade school, $170,000 for a typical high school.
Of course, the organization is ready with more expensive ideas for any district that asks, even though some other experts say physical security only goes so far.
It's not just an issue of fortifying your front entranceway and throwing up some additional cameras. It's what's behind that fortified entranceway in terms of the school climate, the culture, the training, the people side of school safety that really makes school safety different and more important and meaningful.
No argument here in Newark, where the superintendent says the best deterrent to violence is making sure students are better educated in the first place. For Nightly Business Report, I'm Scott Cohn in Newark, California.
Coming up, businesses are jumping on China's push to create a winter sports industry ahead of the next Winter Olympic Games. The Weinstein Company is moving closer to bankruptcy. The studio's board of directors said a $500 million deal to sell the company fell apart. The movie studio's co-founder Harvey Weinstein was fired late last year after being accused of sexual assault and harassment by dozens of women. Weinstein has denied any non-consensual encounters. The Winter Olympics in Pyeongchang may have just ended, but already some business owners are looking ahead to the next Winter Games in China, and they see opportunity. Eunice Yoon has our story.
The Beijing Olympics is 4 years away, but Austrian businessman Gerhard Flatz is preparing today for one of China's newest fascinations. His sportswear company, KTC, bought a Swiss brand called Mountain Force, which he hopes will one day attract the country's up-and-coming skiers.
It's a massive opportunity, especially for the Chinese market.
Traditionally, Chinese people haven't taken a whole lot of interest in winter sports. But with the Beijing Olympics coming up, the government is making a big push to promote sports like skiing.
Thousands of children, like 9-year-old Shi Yu-chi, are being taught how to ski and snowboard at this resort in Chongli, the town hosting many of the Olympic events. I watched some videos of snowboarders doing flips in the air, she says. It looks exciting. Other students in China are being required to get excited as part of Beijing's ambitious plan to put 300 million Chinese on the slopes by 2025. The government is even subsidizing ski trips for nearby schools. In this city, every primary school has a certain allotment for students to come here, this instructor says. Ever since the government created the slogan 300 million people on snow, kids have been loving this.
The Chinese like a little bit the glamour and the glitter.
Businessman Flats believes the grand effort will mean increasingly affluent Chinese demanding increasingly stylish ski wear.
We see very much that the affluent Chinese consumers are skiing in Switzerland, and they take pictures in a Swiss brand, and that will definitely help us to boost the awareness on the Chinese market. We got a bit more, see a bit of retro, modern, a lot on innovation on materials. It's absolutely dry.
You think Chinese people will like this?
Absolutely. They will love it because it keeps them warm and they're looking good.
For Nightly Business Report, I'm Eunice Yoon in Shopping China.
And before we go, here's another look at how stocks fared today. The Dow advanced 399 points to 25,709, led by financial and technology shares. The Nasdaq added 84, and the S&P 500 was up 32. And that is Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us. Have a great evening, and we will see you here tomorrow.